Hello traders, welcome to today's video. So let's talk Fibs. Fibs are our friend. We love Fibs. They are a great technical analysis tool to use in confluence with other technical analysis methods, price action methods, order flow, and whatever else it is that you like to trade. So today specifically we're going to be talking about the TC trend continuation Fibs. We're going to do a brief overview on what they are and how you can use them to trade. This shouldn't take more than a few minutes because it's a relatively simple concept, but I do hope that you enjoy the video. So first of all, before we actually go into the theory behind it, let's just look at the levels. Okay, so we're looking at a Fib retrace between the 618 and the 786, and then you've got the midpoint here of the 702. So exactly halfway between the 618 and the 786 is the 702. Then as your targets, you are looking for the reciprocals of those levels, which are the negative 272, the negative 424, and the negative 618. So what exactly is this and why is it like good? Okay, so first of all, it's kind of similar to the golden pocket. Okay, the golden pocket is something that everybody knows. Everyone knows the golden pocket. It's been around since the beginning of time, and it's something that a lot of traders use within their trading. But for me, I find that it has some very critical limitations that make it more difficult to trade off of. So first of all, it's got a very narrow window of opportunity. Okay, you're looking at a very kind of thin window where you're looking for your entries. It also lacks a target price. So generally speaking, with a golden pocket entry, you're literally just looking for it to just kind of peak above a previous high. So if you're looking at something like this, let's say you're coming up and you've got your 618 retrace into your golden pocket, at that point your trade's kind of done by the time that it comes up towards those highs. So it lacks a target and it lacks good risk to reward. And often, you so often see with the golden pocket that you do this kind of thing. You get your entry in the golden pocket, it'll come and stop you out, and then it'll continue off onto your targets. So it does have some certain limitations. Whereas the TC Fibs, okay, the trend continuation Fibs, they give you a nice wide window of opportunity, okay, which makes it really good for scalpers because as we so often see, price just loves to do this kind of thing and then actually move on up to whatever target it is. It gives you a mathematically based target, which is the reciprocal level. So we're going to go over that in just a little bit more detail in a second, but these targets are mathematically linked to these levels. And it allows for those triple hits. So as we so often get within crypto, you go bang, 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 and then you reverse, or you go bang, 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 and then you reverse. So it allows for those double little stop hunts, those three spikes up into the highs, or those three spikes up into the down into the lows before you get a reversal. So they are generally a much better, or at least I much prefer to use this Fib level, this Fib strategy for my trading more so than the golden pocket. So the calculations, okay, so the 618, this is the legend, okay, the golden Fib. It is the most well-known Fib level. It is the one that I guess as soon as you start learning to trade, this is the one that you look to. The 786 is another regular Fib level which has great results. So as we know, the 618 and the 786 are both fantastic. We like them. Crypto likes them. Other stocks, indices, commodities, they like to revert and retrace back into those 618 and 786 level. And the 702, as I mentioned earlier, is the midpoint between these two. So if you split the difference between that, your 702 lies right in the middle, so it's a nice little midpoint. As if you're looking at this as like an order block or something like that, where you're looking at that midpoint as being a really good little entry on there. Each negative Fib is based off of the reciprocal. Okay, so this is a mathematical thing. Look it up on Google if you want to. The 618, the reciprocal of 0.618 is 1.618. And then to flip that into a negative Fib, you are going into your negative 618. Okay, so the reciprocal of this is this. The reciprocal of your 702 is the 1.424, in which case you flip that into a negative and it's your negative 424. And the reciprocal of the 786 is the 1.272. Then you flip it into a negative and then you've got your negative 0.272. So what that then leads you towards is, actually I've got one more bit of text, the rules, okay? So the rules for this, it's really good to be used in confluence with other levels. It is the same as any Fib strategy. You don't really want to use it on your own. You can. I'm going to give some examples of how this has worked recently. But ultimately, Fibonacci levels are for confluence. Okay, you want to have like a good horizontal. You want to have volume there. You want to have other stuff there that's giving you a basis for a trade. And then your fibs are used in confluence with that. It is best when trading a trend. So if you're in an existing trend, let's say you're in a really nice uptrend, it's really good to get those continuation plays where you can go into here, into there, and get that continuation. More so than a reversal where you're looking like this. Okay, so it is better for a continuation rather than a reversal, but it can also be used for a secondary test before a market structure change. So let's say you got this move down, you kind of come back up into here, you're looking for that retrace and you're looking for this high to get taken with this major change of market structure and then reverse it. It can be used for an entry and an exit on this as well. But of course you would want to have confluence there, a good high time frame level, something along those lines in order to give you confidence that you are going to get a reversal from it. And of course, as with all fibs, they are guidelines. Nothing in trading is exact. So Fibonacci levels, you're not going to just tap into the exact dollar very often. It's a zone. Okay, it is a zone in which you look to enter and a zone in which you look to exit. So the levels themselves, okay, what you are looking at, and this is what I mean by the reciprocal. So if you have your 618, you are looking at a target of the negative 618. So that would give you a path like this. Let me just shift this over slightly, and then you see price coming up. It hits into the zero, and then you come into here. So this should be like here, shouldn't it? So then you've got your retrace, and then you're getting that continuation up to the 618. The second one off of this, okay, if you are going from your 702 retrace, then you'd be looking up towards your 424, and then that gives you a retrace into the 702, back into the 424 there, and then the same here, your 786 goes into the negative 272. So you've almost got those diminishing returns. So the deeper the retrace, the less the return. So you have those diminishing return effects off of these. Okay, now let's just have a look at a few examples. So if I just shimmy on down here to the chart, then what we can look at here is an example from, I mean, this is relatively recent. I'm recording this in December, and this is also in December. So there you go. Relatively recent price action to be looking at. Now you have a low, you have a high, and then you come into your zone on here. Okay, you come into your TC, your trend continuation zone off of this, and you can see here coming quite close into that 786. We can just nudge that down slightly to come into that 786 there, and then what you are getting as a target is, because we are coming close to that 786 and you're in the zone, okay, you've got that zone that you want to be taking the trade from. If you are wanting to take a long position, you know that your target, because you've come deeper into this, you're looking for a little bit more of a shallow move up that comes quite nicely into that negative 272 level just above. So let me just flip that back on here. I'll remove these in a second because otherwise it will get quite messy. But you get that 786 there into that 272, and you can actually see, because the general area was holding quite nicely, you do end up trading through all of this itself, but it's a really good take profit level to be aware of. Okay, then we go on to the next one, and this is giving you a little bit more of a local one. So once you start to kind of come out of this, then you have this little local retrace just here. Okay, where you've got your low, you've got your high, you come back in here around about that 702, and then to that 786, and then you've got your target coming up here between that negative 272 and that negative 424 off of this as well. Okay, so you can see here, you have that retrace into the zone, into the TC fib level, and then you get that continuation up from there. We'll put another one on the chart here, and we'll lose this one. This one here, okay, you just about tap into the 618, like literally just about tap into the 618. Sorry, when I was doing this, I wasn't using the magnet tool, but you just tap into that 618. And then because of that, you get a shallower retrace. Okay, you hit that 618, and then look what happens. Yes, you get an initial kind of rejection off of the area above here, but eventually you trade all the way through, all the way up to that negative 618 fib. which is what you want to be seeing as the reciprocal of this. That gives you an entry down here if you wanted to take a long position, and your target would be all the way up here. And you can see kind of the reactions that you're getting from this. Now, of course, like I say, it should be used in confluence with other things, but just showing them on the chart on their own, it makes sense. Okay, it is making sense. We'll do another little bit here, and you have a low over here. You come up into your high, you just front run it on this occasion, and from that, okay, this is where you're looking at a potential reversal. Okay, so you front run the level, you'd be expecting a big move up here as it breaks, but you don't. You get that kind of failed breakout, you find yourself back inside, and at this point is then you can start to look. This gives you an idea, okay, maybe this trend is exhausted, maybe we're looking to reverse this. So you flip it on its head, yeah? You flip it on its head, you look for that retrace, and this is actually one that we did within the trading room, a setup that I had posted myself within our crew section, that we had this short opportunity from here, and your targets as the 618 are going to be coming in down here, and look what happened. Okay, you got that move into that zone, and then eventually you do get continuation from that. But even with that continuation, look, you now have a confirmed downtrend, you have a pivot high, a pivot low, you come into that 618, and where does it find that little bit of support briefly? Within that target zone for that trend continuation. You bring things down one more level, you have a high into a low, you have your retrace into your 618, and then where does price find the support? It is within that zone. But once again, okay, your 618, you would be expecting quite a big move down. The reciprocal of this down into here, you would of course be taking profits. But if it does not reach its intended target, you can then look for a reversal off of that and flip it back the other way, which then gives you, okay, you've got another short example here where you have a decent move up because it didn't quite hit the target. And as you can see, price now not getting that continuation, but that still would be a target down here. But you can see another little level up at the top here where it comes into that 618 to 786. There's your target, and then you get that wick down into it there. So a few examples. Okay, this is something that you're just going to have to be using as you're going along. You can just pull it wherever the chart may be. Okay, we may even have an example of it here where, let's say, price, there's your low, there's your high, price has come into the 618. Okay, you can see it just here, so this would give you a target for this up towards here. You can see fairly deep retrace, so you'd be looking for, if there is a long position off of this today, you have your entry down here, you have your stop loss around here, and then you're looking for that continuation up towards this zone, with each of these being take profit. But because you've gone fairly deep into this, you'd be targeting somewhere between that 424, negative 424 to that negative 618 from this. Okay, so looking pretty good there from this target here. Okay, so hopefully that explains it. I hope you did enjoy this video, and I will see you in the next one. Cheers, bye.